Okay, I just put out a tweet. If everybody could share that one way or another, either you want to tweet out from your personal account, let people know that we're starting, or just tweet that out. That'll get it on their timelines. Again, Thursdays are a little crazy because I do 5 spaces. So not all of them have reminder tweets set up for that individual space. So people have not had the chance to see a reminder tweet on their timeline. So would be great to get that out now. Thank you, Brian, for sharing that. With that being said, let's get right into it. So we're going to go first to our speakers for just, overall feeling on this market, what they've been trading, what they like, what they don't like. And then I'm going to put out a tweet in just a minute, ask for people to submit tickers. If you quote tweet that tweet with a ticker that you want to analyze, that is the best way that we are going to see it and get to it. All right. Brian, going to you first. Thoughts on the market right here?
Volatile. This whole thing is, the bounce of the last couple of weeks has been under with a declining 20 and 50-day moving average. That tells me don't trust them, that we're in a, counter trend rally until proven otherwise. So all of my cues have been from shorter term time frames, and I've been pretty active in terms of getting in and out of things. I bought Apple yesterday and got stopped out with a loss of about it was 90 cents, which was 0.15 R. And at the end of the day, I was kind of regretting it, thinking I had gotten shaken out, but that proved to be a nice thing yesterday. So I've taken a couple of really small losses and holding on to some things that are still working. I just got stopped out of here this morning, KNBE, no before. Basically a 0.10 R. I had raised my stop up as the stock started moving and got out of it because it's just not following through, and this market is nuts. So, I've got a couple little straggler pieces, but I got out of Expedia. That's really been my trade of the week. Expedia, I bought it at 186.90. Took my first third off with a gain of $2.10, and then yesterday was stopped out of another third with $9.50. And then today, I was stopped out at 199.02 on the balance, and my goal there was to either be stopped out with a very aggressive stop, or to hold or to sell it before the end of the day because they have earnings after the close today. And I just bought it at 187 basically, and it ran to 200 in 3 days. So I'm going to ring the register. It does that every time and not risk it, especially when we see these earnings, just devastating big stocks that are supposed to hold up. And, just got to listen to the message of the market, which is be quick or move to the sidelines.
Definitely seems to be the golden rule right now. I had that in my head this morning. We were trading options live at the open and got into Apple. It popped. Options were up like 18-20%. We're like, okay, cut, we're out. And now look, the whole thing fell. So completely agree with you. Okay. Awesome, Brian. Thank you. Richard, same question to you. Sentiment right here and what you've been trading.
Yeah, like I said last time, I think Brian says it better than I ever could. But yeah, a very similar view to his. Pretty volatile action. I thought this morning was very constructive at the very beginning, but then, of course, some news hit and we kind of got a fade across the board. What I have been encouraged to see is a few gap ups after earnings. Bill.com, Snapchat, DDog as well today, although it's fading a little bit. So those signs are encouraging, but still we have a lot to prove in this market, I think. And it's not yet that easy dollar environment where we're trending above the key moving averages. And there's an overwhelming amount of stuff to choose from and to trade. So in terms of what I've been going after, today I tried Tesla as well as DOX. DOX through the high volume close, which is at, let me get my cursor on there. That was through 61.78. I think there's a little bit of slippage there, but I ended up selling that for a small loss. It reversed. Just needs to set up and build a little bit more, but that's when I tried Tesla as well. I played on the oops reversal, got stopped slightly in the money here. So things kind of reversed from this morning. But I also have positions in Snap and Bill, which faded a little bit today, but so far are holding up, I would say, a lot better than many other kind of growth names that you see across the board. So I love to see good closing ranges. Hopefully things stick into the close. But once again, these are still below some key moving averages. Snap still below declining 50. Looks like that's resistance right now. But I love the volume on the earnings report. The highest volume it might even be forever, but definitely in the past 12 months. And that's one thing I look for, huge volume pushes to the upside, and then it's acted pretty well since then. So those are a few names I've been trying. Once again, stop for a small loss on Docs, for a small gain on Tesla, which is still kind of going sideways and tight. It's not a broken chart pattern just yet. It's still below declining 21 EMA, but this is kind of a low cheap pattern for those of you who have read Mark Minervini that's potentially developing here. So I'm looking for a definitive move up through basically 950. And I'd love to see it get back above the moving averages. Still pretty early on this one, so we'll just have to wait and see. But yeah, in terms of the market, still not diving in full exposure. Still being a little bit tentative, and we have to see whether things can continue to develop. A lot of the strongest stocks in the market are energy names right now, and we have seen a little bit of push in some more kind of software names and traditional leaders here, but still things have a lot to prove.
Perfect. Thank you. Okay, let's get into some of these names. I did put out a tweet and ask people to drop tickers. If you are able to go ahead and quote tweet that tweet that is pinned up top with the ticker, we will definitely see those, be able to get to those first. If you don't want to, that's fine. You can just drop it in the comments underneath. Not a ton of tickers have been dropped so far, so we will definitely have a chance to get to the ones that you do put in. Okay, so right now it looks like, Brian, I'll go to you first for Wix, WIX, and Uber. Still on mute.
Oops. Okay, there we go. I was saying, yeah, I haven't seen this name in a while. I think they're a Chinese name, and I took all my Chinese names off my list because I don't trust them at all. And I'm not sure if that's true. Are they a Chinese name? Do you know?
I'd have to double check.
Yeah, it doesn't matter either way.
Yeah, I think they're a little bit shady. I don't know if they're Chinese, but I've heard some little shady things about it. But
okay, well, it's currently, it's certainly the shadiness Israeli. Okay, generally I don't trust the Chinese names, and I think we've discussed that before. To me, they're like small biotech stocks that you just you've got to be extra careful with them. I would rather and sorry for breaking the subject here a little bit, but when it comes to Chinese names, I'm much more comfortable being short those names than long, because they play so many accounting games and little frauds and scams that they do to defraud the U.S. investors. But this one, I guess, is Israeli. So the thing here is it's a beautiful stage 4 decline just below every key moving average, the 20, the 50, the 100, the 150, the 200, the 347-day moving average. I'm making that up, but it's guilty till proven innocent. It's in a downtrend. There's no reason to buy a stock like this. I hope that the person who's asking me is looking for advice on where to short it, and I would say maybe below today's low. That would be a lower low below the 5-day moving average, and then a stop back up above today's high. But I would not go anywhere near this with money on the long side, because people who thought they were and I'm not picking on anyone here, but Gav, that my theme every time I'm on here, whether we're in a beautiful uptrend or if we're in a more difficult environment like we've been in recently, is you simply don't buy stocks with declining 20 and 50-day moving averages. And today, the best example of that is this AFRM. It bounced from 50 to 75, and people thought, hey, what a great company this is. I'm going to continue to hold it. And here we get, the stock to drop 30% today after being up 10%. So Wix, I would just stay away from it from the long side. If they don't scare you out in the stage 4 decline, they will typically wear you out in the stage 1 accumulation, and that can often take years. So no reason to be involved in that. And what was the other one, Gav?
The other one on there, let me pull that back up one more time. The other one was, sorry, I'm going back to the person, Uber.
Oh, Uber. Okay. Uber. This one's tricky. I mean, it's still, I'm looking at a weekly chart to start out. And I see a stock that's got a very clear pattern here, and that pattern from the beginning of last year has been a consistent pattern of lower highs and lower lows. It's in a downtrend. We've got a declining, the 50 days just starting to flatten out, but above that we have the declining, 30 and 40-week moving average. We're below all the key volume weighted average prices. We've gotten a nice bounce here the last week from 34.5 up to 42 and change today. So where has it come from? It just rallied 25% in a primary downtrend. I would be looking at this stock and saying if I felt trapped in it, I would be looking to get out because it's still guilty till proven innocent on the weekly time frame. So rallies should be sold into and avoid it from the long side.
Okay, perfect. Thank you, Brian. All right, Richard, here is a couple for you. So one of them, which I know is pretty popular with a lot of people, but I would be interested to get your opinion because I know there's a lot going on with it, is BBIG. That's one that's had some pumps in the past, and the other one is going to be CLS.
Okay, so starting with BBIG, this is one I'm not super familiar with, but just looking at the chart pattern, like you said, it looks like it has a pattern of these really quick, fast moves to the upside, and then it basically gives it all back and then some. So this is not really a stock I'm super interested in trading, looking at its character, but we are above the key moving averages. It really depends on your style. This isn't really my style at all. It's just super volatile. Looks like it can move plus 23% and then down 30% the next day. So from a risk standpoint and just being able to sleep at night, not really one I'm interested in. But if you're able to get in through the Tuesday high, the 2.8 high, that would have been a pretty good entry on this past Wednesday. But if you're looking for a long entry here, it's a little bit short-term extended in my mind, especially considering the super volatile nature, and it's still below the 200-day moving average. So, yeah, those are my thoughts on that one. What was the other one, Gav?
The other one there was CLS.
CLS. Okay. Let me bring up this one. Yeah, another one I'm not super familiar with. Not sure what they do, but this one is in an uptrend above a rising 50, 21, and 200-day moving average. So that's a plus. We had a little bit of a downside reversal on Wednesday, the 2nd of February, but it pulled back to the 21 EMA. I would have liked to see lower volume on that pullback, but it did find some buyers there. Good push on Wednesday, although on lower volume. And now it looks like it tried to break out through the Wednesday high, but then was pushed back here. So it's still kind of a wait and see game. Probably the better entry would have been near the 21 EMA on either yesterday or on that Tuesday. And right now it's just kind of wait and see whether it can actually push out through that Wednesday high or if it falls back to the 21 EMA and even lower. So still wait and see on that one, but I do like the overall trend. Looking way back on the left of the chart, this is always important to do. You can see that back in 2018, in the kind of June, July timeframe, we had a little bit of resistance right at 12.6 around there, and that's exactly where it kind of found some sellers here on that downside reversal here in 2022. So always very helpful to keep everything in context, look back on the chart, look at a monthly chart, look at a weekly, and spot potential areas of resistance looking back to the left.
Okay, thank you, Richard. All right, Brian, the semis have been super interesting, especially leading into Nvidia's earnings next week. Can we get your thoughts on AMD and Nvidia?
Yeah, definitely. AMD, it rallied right up to the volume weighted average price off of the December high, November 30th, actually, yesterday and today, and just shy of the declining 50-day moving average, after running from a low of 100. So it just ran 30% in 2 weeks. So again, where has it come from? Where does it have the potential to go before it's likely to encounter supply that has the potential to become resistance? Are the questions I want to answer. And again, it ran from 100 to 130 and change. right up to the prior support from mid-December and then early January before that was broken. So we're at prior support tends to act as resistance. We're at the volume weighted average price from the all-time high. We've got a declining 50-day moving average just overhead. I would say that it's too late to enter this stock for fresh money, that if you've purchased it recently, protect your gains before it drifts all the way back down. I'm not saying I expect it to, but it's certainly possible in this market. So too late to buy it. Let it settle down. Maybe what we see is it pulls back down towards 120 even. The 20-day moving average starts to flatten out, and then it kind of pinches between the 20 and 50. But right now, it looks to me like the move has been made there. And very similar in Nvidia, that it's run from 210 up to 270. So again, percentage-wise, that's 60 points. That's 30% in just a couple of weeks. That's a hell of a return, and we're no longer in an uptrend. Uptrend based on the direction of the 20 and the 50-day moving average. So I think that both of these have a lot to prove, that the easy money is no longer there. This very well may be a lower high. Because we've still got that pattern below the declining 50-day moving average, and that 50-day moving average is just overhead. And we also have the volume weighted average price from the all-time high up at about 280. So 275 to 280. I think if it's going to continue to move higher, that's where it's likely to stall out, ahead of earnings. It's also prior support. But right now, if you've purchased it recently, that's a hell of a return. So for traders, lock your gains in. If you're a long-term investor, I don't understand what you do in the market, so I'm not going to give you any suggestions because I don't invest. I am a trader. So everything is time frame based. And for me, if people ask a question, what do I think about a stock? I'm going to talk about it from my perspective, unless they clarify, hey, I've been holding this from $50 a share, and I want to protect my gains or whatever. So my answers are always going to be from my specialty, which is swing trade, up to 3 week hold periods, and these are both getting extended in a shaky market.
Perfect. Thank you, Brian. Yeah, excited to see what happens as we run into earnings. I did see a lot of call volume actually coming in on AMD today. There was a pretty big sweep that came in. Brian, do you look at call volume at all?
I don't,
options?
not a bit. To me, it all gets reflected into the chart, that you're going to see it because the options. When you see these big call sweeps, the person who sold those are going to hedge them, and they're going to reveal they're going to reveal the true supply and demand in the price of the stock and the volume there. Whether it happens today or in a half hour or tomorrow, that is, they're hedging. It eventually shows up in the trends. So to me, it's just, I know a lot of people use it and find value in that options data. To me, it's just another layer of complexity. I'm not sure if that's the right word. That it just makes, I want to keep it as simple as possible. And I truly am of the opinion that only price pays, and that, news and the market's a discounting mechanism. Everything known to all participants is reflected in the current price. So, and that includes the options get hedged and show up in the volume.
Okay, awesome. Thank you, Brian. Speaking of which, I'm making a post right now. Someone just bought $300,000 of Twitter calls for tomorrow, which I always find interesting. Okay, going over to yourself, Richard. We've got a couple of good suggestions here. Let's do Tesla as well as SE.
All right, so starting with Tesla here. This stock found pretty nice support at the 200-day moving average. That was a nice line in the sand. Good hammer candle on that day. Then it pushed up strongly the following day, and now has gone kind of quiet and tight on declining volume over the past recent sessions. It is below declining 21 and 50 SMA, so still really needs to prove itself here. This is still kind of in a low cheat area if you follow Mark Minervini's style. And like I said, I tried it today on a oops reversal setup through the prior day's low, got stopped out for a small profit. Wasn't willing to give it too much room because it was reversing. And right now, it just still needs to prove itself. It has to get back above the 21 EMA, get back above the 50 SMA. If it does so, it could start a new uptrend. But right now, it's still just kind of going sideways in no man's land. So when a stock is going kind of sideways on declining volume, I kind of say it has to make a decision either to the upside or the downside. And right now, it hasn't yet made a decision. And pretty much over the course of the past, say 2 months or so, it's been chopping sideways and overall just kind of making lower, not quite lower highs, but overall kind of gradually moving to the downside. So I think it still has to prove itself. It's definitely a liquid leader I'm always watching, not just to potentially trade it, but also for overall market health. I think overall, when it's in a nice uptrend, stocks do better and growth stocks in general. So definitely one I'm watching, but still has to prove itself a little bit. Moving on to, what was the next stock again? Sorry, I forgot it.
SE.
SE. Perfect. So this stock is in a downtrend. It's below declining 50 SMA and 200 SMA, but it has started to move up over the past 2 weeks or so. It's gotten back above the 10-day moving average. The 21 EMA is curling up a little bit, but it just started that. So still has a lot to prove. And given that it's declined about 65% or even more over the course of the past few months, this kind of quick move up, to me, even though it is 36%, and you could definitely trade it for a nice swing trade if that's your style, doesn't inspire too much confidence. We're still in the context of a longer-term downtrend. And the stock has already come quite a ways from those March 2020 bottoms, about 650%. And now it's kind of changed character and is now in a downtrend, and still has a lot to prove before I would consider buying it. So a lot of stocks look better than this. Yeah, this stock just has a lot to prove. It definitely has been decently moving the past 2 weeks, but isn't super high up on my radar just because I think it is in a downtrend right now.
Perfect. Thank you, Richard. Okay, Brian, let's hit on some of these social media stocks. If you could do Snapchat and Twitter for us.
Okay, Snap. Going back to SE for a moment, I would also point out that the stock is having trouble the last 2 days with the year-to-date volume-weighted average price, and this stock looks like a lot like AFRM did yesterday. That's what happens to stocks in these primary downtrends. Anyways, over to Twitter. Again, it's in a downtrend. They've got a catalyst coming with earnings. There's no way I would take a bet because that's essentially what it is. Some people like to bet on earnings, and it seemed to have worked with Disney. But generally news and surprises follow the trend. The market's a discounting mechanism, so it's run up from 34 to 39 ahead of this event, 15%, and now they're going to report news. It's having trouble also with its year-to-date volume-weighted average price here. I would just, say that there's too much event risk with the earnings. I would completely avoid it. And then Snapchat, when you've got moves like that, I just take these off my list. I mean, when the stock goes from 33 down to 25 and then back up to 35. And it's stuck right at its declining 50-day moving average. It's still in a primary downtrend. I mean, it may have marked a near-term bottom, but again, I'll go back to if they don't scare you out, they'll typically wear you out. And the personality of this stock now, I think, is going to, when the stock acts the way this one did in the last couple of weeks, you see a change in the personality of the stock a lot of times because the personality of the people who trade the stock change, where you might have had a more stable institutional based control of the stock. Now you've got all these day traders in there trying to chase it up and down. fade the moves and that, and it becomes a little bit more schizo. So again, it's, from that failed move lower, obviously came a fast move higher, but it's at the declining 50-day moving average, touched right on it today. Not a stock for me to trade. And I always feel bad when you ask me about these stocks because I seldom like them. And it's not that I it's just that I'm very selective. I need to see multiple time frame alignment before I'm interested in getting involved. And we've got a downtrend on the daily and weekly time frame. The short term is just kind of all over the place. It gapped up and had 2 days of strength, and then gapped from 38 down to 35, and it's slowly crawling back up again, right at a potential area of supply. No interest.
Okay. Yeah, and it's no worries to tell it how it is. I don't think people have like their hopes hurt. I think it's good for people, right? Like some of the time when I've heard you, the way that you speak in certain stocks or charts, it saved me because I've gotten out of them if I had a long position. Different areas like that. I just vividly remember if you go back, even not that long ago. Maybe it was on. I want to say. Okay, so it looks like I've traded options on it more recently. But if you go back to Neo, I know we did a space on December 14th, actually. And on December 14th, if you look at the Neo chart, that was kind of right where it started breaking down. So it broke down below all the key moving averages right around the first. And then we were looking at the 14th, and I'm like, oh, I wonder if this could come back up. And you go, no, this is a broken chart. It's below all the key moving averages. It's below this. So I sold my whole position. And, now look at that. That was at 33. Now it's at 25. And it's dropped all the way down to 20. So
Yeah,
definitely, it doesn't.
and Gav, here again, if I can interrupt you, that, then on the 29th, it went from 27 to 34, 4 days later. And that's, very similar to what SE looks like today. If you look at, where Neo was on on January 3rd of this year, that looks like it's where SE is. It looks like where Afram was. I mean, these stocks in downtrends get these significant bounces, and it gets people excited. And there's nothing wrong with trading these bounces if you get the right entry into them. But you've certainly got to, think that this is a bounce. It's time to get out. AMD, Nvidia, 30% bounces in 2 weeks with declining 50-day moving averages, not a recipe for long-term success.
Absolutely. Okay, let's go. Let's actually do the indices real quick. Richard, would like to hear your thoughts here, and then we can get to Brian as well on the Qs and SPY.
Sure. So starting with the Qs, this is the Invesco QQQ Trust, tracks the NASDAQ Composite. Overall, it's just kind of been pretty volatile over the past few weeks. We had a push up into the year-to-date anchored VWAP, and then we had a gap down on 2-3, went sideways for a little bit, looked like it was breaking to the upside on Wednesday, and then we had a gap down, filling that gap, a push up, and now we're right at the lows of the day. So recent action, extremely volatile, tough to manage risk in this environment, and today specifically is pretty weak considering we are at the lows of the day. We're once again having trouble with that 200-day moving average, as well as that anchored VWAP from the start of this year. So still has to make a decision. We're potentially having a higher low form, but it has to yet prove itself. And I'd love to see us get back above that 200-day moving average and start to build and continue to make higher lows and get back above the 50 and see that moving average curl up under price. I think that would be super constructive, and that's what I'm hoping to see. And we do have to get back above definitively that anchored VWAP. Going over to, what was the other index you'd like me to take a look at?
SPY.
Of course. So obviously this is the S&P 500 ETF here. Looks pretty similar as they usually do. Once again, negative action. Today we had that gap down, push upwards, and now we're right at the lows of the day, back below the 10-day moving average, 21. We are sticking above the 200-day moving average. I think that's an area of interest for sure. And plotting an anchor VWAP right at the start of this year, you can see that we're actually back below it as of this point. which once again is a little bit of a negative, and we are below a declining 50-day moving average. So right now it's kind of a wait and see game, very volatile, gap ups and gap downs. And today specifically, I don't like that we're closing basically at the lows of the day, or we'll have to see in 30 minutes. But right now we're at the lows of the day, and we had that kind of failed move upwards, and now we're seeing basically sellers take control into the end of the day.
Perfect. Based on the fact that you were just using those anchor view apps, Brian, since we have you on, and maybe not a lot of people have heard this, can you explain to people, why you use anchor view app and what it means when the stock is above or below that, or the index in this case?
Sure. The Anchor VWAP is simply the volume weighted average price from a user chosen start point. The traditional VWAP is for one day. When we choose a place to measure the supply, it's a measurement of supply and demand. Who has control? It's an absolute fact. It's not an oscillator or indicator that is open to interpretation. It tells us, based on the volume weighted average price from a period of time, are we above or below that level? And the year to date volume weighted average price is important because a lot of institutions get their performance measured against a benchmark, and they make their decisions on where are we in relation to that. So if they're net sellers, if their investment committee said at the end of the last quarter, hey, we're going to lighten our inventory during the first quarter of this year, and big pension funds think that way. They make quarterly decisions. So they'll say, if it gets up towards that volume weighted average price for the year, we want to sell extra because we're getting a perceived value while we're trying to move out of, cut our position from, our exposure from 82% long to 80% long. They've got to sell billions of dollars worth of stock. So they use a volume weighted average price from an event. So they happen to be very good from earnings reports, from gaps, from year to date, month to date, week to date. And, just looking at the SPY, I had put a couple charts up on that today, that the initial bounce came right at the week to date volume weighted average price. And now we're plummeting through that. That tells us that, the people who came in, with buy orders for the week are now kind of pulling those orders, and the sell orders are in control. And it looks to me like, for the SPY, we're likely to head for a test. And, the first important test will come at about 442.5, which is the volume weighted average price from the January 24th gap lower. So that was a big event that day. We saw a really large volume. We saw, a gap in a reversal. So I want to know the psychology of the participant. You can kind of think of it as sentiment. How's the average person from that event positioned? Well, the average long from January 24th is making money as long as we're above 442. The average short is losing money from that point. So if we come down to there, it's likely it will be tested. And that level is also very close to last week's lows in the NASDAQ, near about 353, 352.5, 353. So these levels, become, to me, initially what I like to refer to as a level of interest. So if we continue to plummet here, from yesterday's gap higher, from failed moves come fast moves, now that this morning we saw the gap lower, and what do? We saw buyers. Well, guess what? Those buyers have turned into sellers. The shorts are emboldened. They're going to press on the gas. Now, if we head down to that 442 level, it becomes a level of interest. It's not a place to automatically buy or sell or cover your short, but it's similar to a 50-day moving average. There's psychology there that, we're trained that the 50-day moving average holds as support, so we tend to stick a bid in there. Institutions, stop trimming their 8 million shares down to 7 million shares, and they put in a bid for 500,000 shares at that 50-day moving average to attract other buyers, short sellers who shorted on the way down, stop shorting and start covering. And it all comes down to supply and demand. It's more about the psychology of the market and who's doing what and why and how they're motivated, how would you feel if you were long? How would you feel if you were short? How would the average person feel from these anchored points that have a shared meaning because of the large volume in the gap? What happens at those points becomes a place to reference to say, now let's look for evidence that maybe the buyers are gaining control, or maybe the sellers maintain that control and push it lower. So it's all about then switching to a shorter term time frame for evidence that the buyers or sellers might be gaining control. And it's, it gets confusing for a lot of people because you look at, again, the daily time frame on the SPY, we're below a declining 50-day moving average, and rallies typically don't succeed in that condition. But we just rallied from 420 to 460, a 10% move. It gets a lot of people thinking, hey, well, that was the bottom, that was it, and we just don't know yet. So we're in a period where we've got a lot of mixed messages from the different time frames, and that simply means be extra careful with your risk management. It's easy to get caught up in these moves off the bottom and these 20, 30, 40% moves in some of these beat up names, but you've got to be ready to hit the eject button quickly. Don't let your confidence move in direct proportion to your P&L. Instead, as your P&L increases, start to become more defensive and vice versa.
Well said, Brian. I'm going to give 2 more stocks, Richard, and then I'll come to you for any closing remarks, if that works. Or do you want to do those now?
Yeah, why don't you hit me with those now? I'm actually overbooked. I'm behind on something here, so if I could wrap it up, that'd be great.
Okay, no problem. Let me give you let's say one more, and then if you want to kind of do any wrap up along with that, I think that will work. So let's just see real quick if anybody has put anything. You know what? I think there's a lot of people that are intrigued about this, and I think Richard kind of talked about it in the beginning, but I don't think we've gone super far, and that is Facebook. But let's get your opinion on Facebook here, and then any closing remarks or any other advice going into the weekend.
Yeah, Facebook's a classic example of don't buy the dip just because there's a perceived brand name here that just because it's down a lot doesn't mean it can't continue lower. Now, if you, in fact, let me take a picture of this and just post this real quick because I happen to have it up. I was looking at it a moment ago, and that is a daily chart and a 30-minute time frame. And I'm not going to, just like Alphabet, I'm not going to call it. I'm not going to call it Meta. I still call Google, and this is Facebook. I don't care what they call it. Anyways, on the daily time frame, of course, we ran up to that volume weighted average price from the peak and then gapped lower on earnings. And now we're at a place where the VWAP from the gap lower is, let me just type this here, FB Wolf. And there. So, that red is the volume weighted average price from the all-time high. We came right up to that on the daily time frame on the left prior to earnings, and people were excited about it. Then they got crushed. Now we're maybe on the right side where you see that 30-minute time frame. It could be making the bottom of a right shoulder for an inverted head and shoulder pattern if it's going to hold, and the neckline of that inverted head and shoulder is actually the VWAP from the gap. So you can see that the sellers are still in control from that event, that they're defending that. But now the stock, maybe if it can get back above the high of today, it could have a little bit of a knee-jerk short squeeze rally. But it's still a broken stock, and it's they just don't turn around and do these V moves after a big move like this. It's more likely that it's going to take a long time to recover. I'm not much into the news, but I am aware that their advertising revenue, which has been their primary business, is down, and they're spending a huge amount of money for what they believe is the next place that the internet is going to go, and that's the metaverse. And Wall Street is saying your profits are declining. You're spending all this money for this vision that sounds cool for the future, but it's going to be a while before you can monetize that. So there's no hurry to get back into this name until we start seeing proof that your current failing business model of the advertising or diminishing model, it's not a failed model, but declining business model can turn around or stabilize, and you stop spending so much money or start monetizing this new area. We just don't see it for the next 3 to 6 months, 9 months, because the market is looking out to the future, and people are still selling the stock because the institutions, that is, are still selling the stock because they don't see the vision of monetization, for at least 6 to 9 months, which is how far out the market looks forward. It's not about what happened yesterday so much as where are we going to be in 3 to 6, 9 months, and the message of the stock is it's not there yet. So short term, maybe a bounce, but longer term, it's going to need to stabilize for a while. There's no hurry to get involved in this, even for an investor, I think.
Okay, awesome. And Brian, I know that you have a deadline. Anything else that you're able to share with us, or any other thoughts?
I think I kind of wrapped it up. Early in the call, Richard said, there's still energy names that look good, and I agree there. Apache is holding up nice. HFC is it's kind of failing here late in the day. Probably, I don't know. Those are relative strength, but they're not absolute strength. And they're just because they're not going down as much right now in the last couple of days. I don't know. I think you've just got to be really careful. I'll tell you, I won't be here next Thursday. I'm on vacation all next week. I'm not going to have any internet or connectivity, and I'm pretty happy about that. So I'm starting to check my brain out here, truthfully.
Okay, awesome. Well, I appreciate you tuning in as always and sharing with us. If anybody in the audience has already checked out what Brian is doing, obviously an incredible trader and someone that's able to come on here and give a lot of thoughts. He also, if you go in his bio, has a link to his book. If you're trying to learn, this is the book I will point you to if you want to understand technical analysis, especially with as he posted using multiple time frames. It is the go-to. So, Brian, awesome having you on. Wishing you a great weekend, and always looking forward to running this back with you next week.
Thanks, Gav. I actually, again, I won't be here next week, so count me out for that. So just so there's no confusion.
Okay, no worries at all. I will have that marked down for next week. We'll still be doing something to the audience. No worries. But Brian, enjoy your time.
Thanks.
Take
See
care,
you guys.
Brian.
Okay, Richard, do you have till 4, or what's it looking like for you?
Yeah, I'm good.
Okay, Evan, you want to throw a couple names out?
Yeah, I am always down. I feel like the first one, we haven't done Disney yet, right?
No, we have not.
I'll take my L, although it's getting closer and closer. So we'll start with Disney. And wow, I'm re-looking through everything now. I guess I haven't checked in the last hour. Everything's just red. But we'll go for Disney.
Yeah, everyone's selling.
Let me get you one stock that's at least hit a 52-week high today.
I mean,
And then
Disney's at
I'll
least
throw that one out to you.
it's still up 5% on the week.
I can do Disney. Let's start with that, and in the meantime, you can find another.
Disney and Wells Fargo.
Yeah, sure
A
thing.
little bank in there.
Cool. Yeah, so starting with Disney, it's still below a declining 200-day moving average, so the longer-term trend is down. We did make it above that 50-day moving average on this gap up, but notice how we're not closing super strong. So even though we did have a gap up, there's not super strong conviction, and that may just be because of the market conditions and how everything's fading into the close. But I would watch that carefully and be on guard for any additional weakness filling that gap over the next few days and weeks. And I'd love to see it kind of stabilize here and build above that 50-day moving average. But we also have, looking to the left, some areas of interest. 159 or so is the kind of intermediate resistance level that I'm watching back in the early January timeframe, where it could be running into some sellers there. But overall, still below a declining 200-day moving average. That's the biggest thing for me. This isn't breaking out to new all-time highs. This is still stuck in that longer-term downtrend for the time being, and we'll have to see if this earnings can change things. But right now, not super interested in this name until it can really start to build out and start a new uptrend. Oh, and Wells Fargo. Can you guys hear me, by the way?
Yep.
Yep.
Okay, cool. I didn't see any change on my speaker things. Okay, cool. So Wells Fargo WFG. Oh no, that's not Wells Fargo. What's the ticker symbol for Wells Fargo?
WFC.
WFC. There you go.
FC. Yeah.
FC. Got it. Perfect. So yeah, this one is making looks like 52-week highs. It's above a rising 200-day moving average, 50, 21, and 10. So all the trends are in alignment. However, it's definitely a little bit short-term extended to the downside. For me, the most recent point to enter would have been on the February 1st day, where we had a nice push off that 21 exponential moving average after a pullback, an intermediate pullback, and that would have started a nice move up, which would have netted you about, looks like 7-8%. So a little bit short-term extended, downside reversal today, so be on guard for a pullback to the 10-day or 21 EMA. But overall, this isn't an uptrend, so that's looking a little bit better than Disney, in my opinion. But we'll have to see whether this pullback it is on low volume or we start to see a lot of pickup in volume in terms of distribution. But yeah, that's kind of my thoughts on Wells Fargo.
Yeah, the 52-week high list is kind of barren today. There's not many ones. Maybe I'll throw one more at you, Dell.
Yeah, sure. And as I bring that up, yeah, the number of stocks hitting new 52-week highs definitely plays into my overall thoughts on the market and the overall conditions. And I know I trade better and have better probabilities when that list is plentiful and there's so many groups on there and so many leading names that you can't buy them all. That's kind of the optimal conditions for me. But bringing up Dell Technologies, similar to kind of what I said with Wells Fargo, we're above the moving averages. That's good, but looks like we're kind of stalling at 52-week highs here. Most likely the overall market is kind of dragging this one down here. But I like how it's above all the moving averages. That's definitely a plus. But looks like we're going to close kind of in the bottom half of today's range. And we'll have to see whether we get a pullback to that 10-day or 21 EMA in the coming few weeks. This has been a little bit choppy, but definitely a pretty nice move off the recent kind of intermediate lows. 124 was kind of that day, big hammer candle on decent volume, and that started a nice push up about 6-7% until the recent action. But we'll have to see what happens, whether this falls through to the upside or to the downside tomorrow and next week as well.
Sweet. Awesome. Evan, any others that you want to throw in there?
No, I think that was good. I mean, we could always go through some of my largest stocks if I wanted to, but I'm chilling to throw back to you, see if we got any other audience requested stocks.
Yeah, no problem. Just a reminder, we did put out a tweet, and we've been taking a lot of the names that have come in on that tweet. So let's go back to that. Looks like there are some more that came in. Okay, Twilio, TWLO, and
bring that up.
BKNG booking.
Awesome.
Oh,
okay.
I just saw SoFlo in here too. He should request again. Sorry, all you.
Okay, you want me to start with Twilio?
Yeah.
Perfect. Yeah, so this is another one that is a former leader that is now just in a longer-term downtrend. And look at where the high was today, smack basically to the penny right on the 50-day moving average. Now it's closing right at the lows of the day. So even though this is a green day, I would call this a bad bar in general. And I'd be on watch for any additional weakness and fall through to the downside in the coming weeks and months. So still has to build out, still has to get back above the moving averages. And right now we're just in a stage for decline. And until it proves otherwise, this is just kind of a short-term rally within the context of a larger term or longer-term downtrend. Moving on to the next stock. What was that ticker again?
BKNG.
BKNG Booking Holdings. Cool. All right, so taking a look at this chart, looks like we're close to all-time highs, which is definitely a plus. We're above all the moving averages, which is good as well. And if you look at a chart, you can see that we're in basically a basing structure here, right near all-time highs that started in basically early November, 11/8 of 21. And now we've kind of moved up, formed a higher low back in late January, 124. And now we're approaching the top of that prior base. And that high is about 2,688 or so. With that said, we are short-term extended 100%. For me, based on kind of how I view things and look for buy points, The last buy point was kind of through a pivot at 2,487. So that would have been the high of Wednesday 2-2. And you could have entered either on 2-7 or kind of in anticipation on 2-4, or even as it confirmed on decent volume on 2-8. So those would have been the previous good buy points. And right now it's a little bit up in the air, a little bit short-term extended. And I think a drift sideways on lighter volume would be super constructive, letting those moving averages catch up to price and kind of form some areas of interest and potential support. But given the market weakness today, I think this is holding up really nicely. Good closing range. And yeah, it's definitely showing relative strength versus the rest of the market. And I love how the relative strength line is in a steady uptrend, and this price is right near the price overall is right near all-time highs. So good things to say about this stock. Doesn't look like it's the fastest mover, and it's a little bit choppy, but is right now what we have to work with if we want to trade stocks that are in uptrends. This is kind of the sign of the times.
Are you making any moves here going into the close?
I was already stopped on Docs and Tesla. I've got Snap, Bill, and remaining position in Bros. But yeah, I'm comfortable with where I'm at right now. I haven't really made any other moves, but I will definitely be protecting my cost, and we'll have to see whether we get fall through on this weakness tomorrow. I think the end of the week is always super telling, and we'll just have to wait and see what happens. But definitely always manage your risk, but even more so when we're super volatile. And don't feel the need to press on the gas all the time. You can take smaller than usual positions and trade lighter until really things make a decision. And there's an overwhelming move to the upside with many leading groups emerging, so many stocks to buy. That's really the hallmark of a super healthy market. And right now we're still, if we are in an uptrend, in the very early innings. And a close like today, let me bring up the cues, doesn't inspire a lot of confidence, and we'll just have to kind of wait and see what happens tomorrow. I think, as I said, the close of the week is very, very important, and we're just kind of chopping around in this 370 to 350 area. And I think the real move to the upside will start above 370, and we'll have to see whether we undercut that 350 level.
Do you have any thoughts here on ASAN, Hassan? This is one that I called out this morning, and
Yep.
I called that out when it was about, I don't know, a percent or two right at open on Spaces. And the reason I did that was because there's something very unique about ASAN, and that is insiders cannot stop buying this.
Mm-hmm.
Look at the last 2 months of data, hundreds of millions of dollars of purchases of their stock ever since. And this really started right after its first big drop off. So if you go to, let's see, where is my trend spider? There we go. You go back to that big drop off day, and then that second one where it kind of came down to December 6th. I mean, you go to December 6th, right there, they just start pounding this. I mean, they came in really starting even like late November, but after December 6th, you just see $37 million purchase the next day, then 19 million, 32 million, 32 million, 16, 38, 38, and it hasn't stopped. They've been buying up until the 4th was the last reported purchase. So I'm just curious.
Yeah, my answer to that is kind of what Brian said about options flow. I know there's some people who like looking at insider purchases and put a lot of weight on it, and it helps their process. It's not something I look at super much. I think like what Brian said, the ultimate buying pressure and selling pressure will be reflected in the overall chart pattern. So that insider buying is reflected on the charts, and the charts even provide more info to that. It also reveals what the biggest institutions are doing, the biggest funds. And right now, we're still below declining 50 and still below the 200-day moving average. So we'll have to see if that insider buying pays off and we start a new uptrend. But right now, we're just in a kind of counter trend rally under a lot of declining moving averages. So it's still a wait and see game. I know this is a big former leader. I traded this one. It was a nice mover in 2021. But looking at the chart, it looks like it's changed character. Look at that 11/22 day where we declined 22% in one day, breaking the lows of that shelf. That is a character change on the chart on high volume. where funds decided to take their profits. They've been accumulating maybe even since the IPO, and some big funds, some big sellers decided to, offload their position. And it doesn't take one day for the largest funds and institutions to sell. It takes weeks and months, and that's what kind of create downtrends. And that's kind of what we're seeing play out here. So until there is a new equilibrium between buyers and sellers, and the buying pressure can kind of, overcome that selling pressure that started when this downtrend started, then there's not going to be a huge move to the upside, breaking into new all-time highs, which is really the time when we make the most profits in the market. So for right now, a positive character change is still yet to be seen, and we'll just have to see what happens. So I know that was a little bit of a long-winded answer for that, but for me, the character hasn't changed too much from kind of a downtrend. Although the past few days, 100% have been positive, we have to see if we can build above the moving averages, see it form higher lows, see it get back above that 200-day moving average, and restart a longer downtrend. This is